Good afternoon. Today we are going to present commodity outlook. Yesterday, Mr. Trump administration raised its stakes in trade war with China, saying it would slap 10% tariffs on extra 200 billion worth of Chinese goods. The 195-page list includes a huge variety of products, from buttons and handbags to mineral and rocks that share their names with certain US publishing, including nearly 9 pages devoted to fish and seafood products. As we know, whenever a market feels the risk sentiment, dollar gets a boost, whereas equity feels the shock. Yesterday, both European and US markets extended losses. S&P and Dow futures dropped around 1%. Yesterday, US PPI numbers were released, which showed a growth of 0.3% compared to an estimate of 0.2%, whereas wholesale sales jumped to 2.5% as it was expected that they would be around 0.5. Now let's have a look on specific commodities. Gold prices came under pressure on Wednesday on back of higher US government bond yields and strong dollar, which also dented sentiment. The threat of further US tariffs on Chinese goods failed to gain investors' confidence in safe haven gold. We believe today gold will recover from yesterday's losses if it breaks the level of 3370. Crude was yesterday's star performer, where we saw a major whipsaw. Yesterday, WTI extended losses to close to 5%, which was the biggest daily drop since June 2017. Crude extended losses mainly due to two reasons. Prices fell on the news that Libya was suddenly set to restore hundreds of thousands of barrels per day, and the another one was that US struck a softer line with Iran sanctions. These factors overshadowed the biggest drop in crude inventories, since it fell nearly 13 million barrels last week, the biggest drop in nearly 2 years, dropping overall crude stocks to their lowest point since Feb 2015. The decline in overall inventory was partially due to fall off in stocks at Cushing and delivery hub for US crude futures, which were down to 7.1 billion barrels. In addition, overall crude imports declined, falling to 7.4 million barrels by 1.3 million barrels. Base metals tumbled yesterday, with copper, zinc, lead sinking to the lowest in about a year as speculators unleashed selling on back of further escalation in the US-China trade conflict. Zinc dropped by 6% but witnessed some recovery before close, while lead failed to stabilize, deepening losses just before to an end of 4.9. That's it for today. This video would have been informative, and happy trading.